is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Eddie in Boca Raton. Hey, Eddie, what's going on?
Hey, Tom. How are you, man?
I'm doing great, man. Yourself?
Good. It is a treasure to have TFNN every hour during the trading day, to be there to help you, to guide you, and even to give you some peace of mind, or like that somebody else is there with you while you're trading this crazy market, either up or down.
Well, listen, we appreciate you growling and prowling with us out here, because we wouldn't be out here, folks, if we didn't have all you guys, gals, tigers and tigresses as clients. And, you know, the market teaches you every single day, man.
Now, Tom O'Brien.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We kick things off on a volatile afternoon, a volatile day in the markets. S&P's right now, just after 3 p.m. Eastern Time. I have a daily chart up here. S&P's up by 26 points, up by 0.4%. You're trading at 67.13 right now, but 100 points off of the highs made 6 days ago, 68.12. That high, you trade lower. Where we were 5 days ago, that, of course, Friday, the acceleration. And yeah, we got positive prices, but we were as low as 66.51 not that long ago. We zoom in on the 15-minute action on the S&Ps. Talk about an acceleration from about 10 a.m. until 1:15, folks. We had selling. Okay, we bounced since then. You see the buying that came in this market at about 1:15 p.m. Eastern Time. Now, on a 15-minute basis, this is the first little bit of selling that we've had since that period of time, almost in the last 2 hours. We'll see. Critical area, you bounce back to where we were at about noon Eastern Time. And yeah, we had some selling at that area as well, bumping up against that bar from about 11:30, the selling we had just prior to noon Eastern Time. NASDAQ 100, pretty similar action, right back to where we were. Volume-wise, selling and the buying at the low of 24,700. Now, on a daily basis, you better hope that we get it higher and we do it on volume. And I say that as in, if you bull out there, because, boy, you had that selling on Friday. You get a bounce on lighter volume. We sell with volume yesterday. And what are we doing? We're bouncing right now on less than 2 million contracts. Oh, that's the M. Let's do it again. On the volume right now, 550,000 contracts. And you're going into 720 from yesterday. Take a look at the S&Ps. Similar action. The selling days exacerbated. Almost 2.5 million contracts on Friday. You bounce on 1.7. You sell off on 2.1 million. And you're bouncing with 1.6 with about 51 minutes to go in the session. Dow, slightly in the red right now. That was quite a day of buying in the Dow yesterday, taking out everything. Didn't quite get above the price of Friday, but you did it with volume in the Dow and the Russell, my goodness. Now, the Russell hasn't beat the volume we had on Friday, but that's an all-time high print this morning. We've given up 30 points, which is more than a full percentage point from those highs, but that is an all-time high print in the Russell. Now, Bitcoin. Okay, Bitcoin had been trading as a NASDAQ 100 entity, as in they were mimicking each other, the ultimate growth stocks to a certain degree. And boy, you're at a critical level right now. Bitcoin hits a low of almost 110,000 today. We're up from there, but we're off by $1,565, off 1.4%. Ethereum off by 3.2%. Ethereum has a high out here, folks, of almost 4,900. We're at 4,000. 900. Hey, you're almost 20% off the highs of Ethereum, and you don't have to back it up far, as in you just go to where we were, 8 days ago, and you were $800 higher, from $4,800 down to $4,000. So crypto, you can believe in the markets, but crypto having a weak moment right now, and those are the two strongest. I know the altcoins, the meme coins down the line, even more so, very pronounced, the pullback. We jump over to crude. Lower lows and lower highs. Crude down 19 pennies. Let's take a look at the short term. You catch a bounce this morning, and then you rip lower. We're trading at 58.51 right now for crude. Lows out there are 57.68. But on a daily basis, I was looking at this earlier. Doesn't match up perfectly. But But yeah, you got lower prices in crude coming at you right now. I had a great conversation with my man Teddy Kegstad this morning. He sees lower prices coming, making some decent arguments for the reasons why. And this goes back to almost a period of 3 months. Basically, the end of July, you hit a price of $70, and since then, you're trending lower. And yeah, not an exact science. Where does that fall? That linear regression, somewhere in there. But lower prices coming at you, and that trend, even from where we were September 26th, $66. We're pushing the lows at 58.53, and we made a low today of 58.20 in crude. Now we jump over to yields. As I mentioned in the top of the hour update, so we were pushing 4% this morning. Higher price, lower yield. You were basically touching the 4% band in terms of the yield on the 10-year. We've pulled back a bit. You have the yield at 4.04. You jump over to the 2-year, similar price action. We were higher this morning. You've pulled back a bit on the 2-year right now. You jump over to the dollar. 98.75, a little bit of weakness in that dollar. We've held out relatively well in terms of the run from the last Fed meeting. So Fed meets 2 weeks from today, folks, October 29th, 2 weeks from today. Okay, and you run from the last Fed meeting, September 17th, 96.21. We're at 98.75 right now. And I find myself wondering if this is going to be a little bit of the rollover in terms of they were selling the rumor and buying the news in that the Fed was going to cut. The dollar weakened up until the moment they actually cut, and then it bounced. Well, we have 2 weeks right now until the next meeting. The market's already convinced that they're going to cut, but look for pressure, weakness on the dollar. And gold on a daily basis. Look at this run, man. It has not stopped since August 20th, folks. From 33.53, we're up almost $900 from that price point. You hit 42.35 today. Volume-wise, last Friday sticks out on the pullback. We had some real nice volume yesterday. You're probably not going to match that today, though. 396,000 contracts yesterday. You're at 289 today. And silver, look at the pronounced day yesterday, and you actually got a red day in silver yesterday. Last Friday was a big day on the downside. Yesterday, you trade lower from that acceleration that we had on Monday. Excuse me, that big volume day. Is that Thursday? Yeah, Thursday, and then Friday. Same deal with gold. October 9th is the big day there. Yeah, Thursday, the pullback. Friday, a reprieve. All right, we check around to some of the banks. Morgan Stanley out with their numbers today. They accelerate higher to 166. We've backed off a bit, but you're up by 4.7%. Bank of America as well, up by 4.5% right now. We had many of the banks yesterday out with their numbers as well. And yeah, as the Journal puts it, the nation's biggest banks are saying the economy's still going. Their numbers say so, that's for sure, man. Okay, quarterly profits for the 6 biggest banks. And this is talking about the green is this year, the blue is last year. They're growing. They're beating across the board. Now, we'll take a look at some of those equity charts when we get back, though, because you're talking about tripling in price over the last 2 years. Many of those banks. We'll come right back, folks.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Kegstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Kegstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. So you have the Trump administration. They're going to set price floors across a range of industries. So you have some equity stakes, you have price floors, and the battle with China rages on. The Trump administration, they're going to set price floors. Strategic industries to combat Beijing, the Treasury Secretary says. When you're facing a non-market economy like China, which it definitely is, then you have to exercise industrial policies, as he puts it. So we're going to set price floors and the forward buying to make sure that this doesn't happen again. And we're going to do it across a range of industries without naming specific industries. Okay. The U.S. also needs to set up strategic mineral reserve. Rare earths, of course, are crucial right now. The U.S. could take equity stakes in other companies in the wake of Beijing's rare earth restrictions. I wouldn't be surprised, the Treasury Secretary said when asked about additional equity stakes for the U.S. government. When we get an announcement like this week with China on rare earths, you realize that we have to be self-sufficient. We have to be sufficient with our allies. We do have to be very careful not to overreach. Well, where is the line on what companies that we should be buying into? Who sets the line, right? You take a look at, jumping back real quick, we take a look at some of these banks as we jump around. And so talking about quarterly profit, okay? Big numbers. You look at JP Morgan last year, quarterly profit $12.9 billion. You're at 14.4. Bank of America from 6.9 to 8.5 almost. Wells Fargo, okay, up and down the line. Morgan Stanley from 3.1 to 4.6. You look at any of these banks, folks, JP Morgan, in the last year, you've traded from 224 to 307. Big numbers on these equities to live up to, and you see it kind of this week. JP Morgan, they delivered strong numbers yesterday. Sent the stock lower. Right, you finished marginally lower, but you came into their earnings at almost 308. Stock trade down to 294 on some decent numbers. Goldman, same deal. Decent numbers. You rip lower to 742 yesterday. But guess what? A year ago, Goldman's trading 520. You just traded 825. These are normally pretty stable entities. You have had a heck of a run, and as I mentioned going into that break, you back it up to 2 years ago, and you're talking about tripling in price from 289 to 825. JP Morgan from 133 to 318. Citi just traded from 38 to 105. Wells Fargo The reins are off them. $35 up to 87, and yeah, they had the best week probably of all. Yeah. Morgan Stanley having quite a week as well. You were at 150 at one point. You've given up some of the gains, but strong numbers from Morgan Stanley as well. All right, we're 2 weeks from a Fed decision. Okay. And in terms of what the market's pricing in, it just keeps going up. So this is the odds for the meeting 2 weeks from today. 97.8% chance they cut by 25 basis points. You go out to December, 94.7% chance they go cut. 50 basis points of cuts in the next 2 meetings. Now, let's go down the line. You go out to January, it's a 50-50 shot that we get 3 cuts by the 3rd meeting, with the only other 50% basically being we get 2. You go out to March, okay, and the market thinks we get 3 meetings with a 50% chance, we're rounding, with 2 and 4 being split on the other side. So you can see how even there, right, the market's not quite sure, saying 3 meetings, and we're split between 2 and 4 on the other side of that. Now, we get a new chairman in May. Remember, you go out to April, 3 cuts is the number, okay, but 2 cuts is still a 20% chance. Now, the reason why I bring it up is I just told you that there is a 95% chance that they have cut to the range of 3.5% by that December 10th meeting. So assuming they do, in the January, March, and April meeting, there's still a 20% chance we're right where we are by the end of the year, and there's a 41% chance we only get 1 cut by then. So there's a real pause after these couple of cuts that we're going to get, because once you bring down the target range to 3.5%, they're going to be less inclined to cut because they're less sure that they're restrictive. The overnight lending rate right now at 4 to 4.25%, they're pretty sure that they're above the natural rate of the growth, right? So they can afford to at least cut, and they're not risking too much because they're pretty sure they're still restrictive right now. And from hearing the chairman talk yesterday, his words, they're a little worried about the economy, to put it lightly. But once you get down to the range of 3.5%, you cut one more time and you're at 3.25% for the lower bound. And if you're at 3.25% on the lower bound and you have inflation pushing 2.9% to 3%, if there's lags in the economy, you might actually be in an accommodative stance as inflation is still approaching 3%. And so that's where they're going to really start to be more and more cautious with each cut. And so we got 2 cuts priced in over the next 2 meetings, but things are going to get interesting next year. But guess what? We got a new chairman or a new chairwoman in May, and the pressure is going to be back on if they haven't cut since then. So 10-year, 4.04%, gold on fire, man, every day. Look at this. We might get a new all-time high this afternoon. We're right up against it, man. Look at this. Since 1 o'clock, you're up another $30. 42.27, up $63 or 1.5% on that gold contract right now. All right, talking about prices. Grocery prices keep rising. Yeah. I mean, check out some of these numbers. Ground beef, bananas. I'll tell you what, folks, bananas are some of the cheapest food you can buy for healthy food. I always joke that if you're ever completely out of money, I just go live off bananas, man. You go buy a big batch of bananas for $2 or $3, okay? Nonetheless, bananas, prices from last year, yeah, you're up almost 10%. Ground beef, what is that? 13%. Coffee, we know. Coffee is a commodity. Coffee trading higher. Ribeye steaks, okay? Yeah, you're talking about higher prices here. Coffee, 20.9% over 12 months. Ground roast, $8.87 a pound. Up $1 since May. Oreo maker, Mondelez. Don't do it to us, not Oreos. Yeah, I could take a look at some of the staples. Procter & Gamble. Look at this stock breaking out. I was looking at this the other day. That's a break, man. This was a nice channel from the area of about 2018. Okay, and look at the volume on this on a monthly on Procter & Gamble, folks. You got some problems in this equity. If you're in Procter & Gamble, Keep your eye on it, folks. And yeah, we get the report out there that not just yet you can fire him, as you have a judge blocks those federal firings during the shutdown, as that battle is going to rage on. All right, folks, I got to check out of here a little bit early today, so we're going to wrap it up right here. We'll replay this half hour, and then I'll be back here 9 o'clock tomorrow morning. All right? Yeah, thanks so much for tuning in, folks. Have a great night. Have a safe night, and enjoy it. Go out there, enjoy your evening, and we'll see you back here tomorrow morning at 9 o'clock. Thank you, folks. Have a great one.